Hey, good morning, everybody. Welcome to Friday. It is the 21st of June. Hope your week has gone well and you're ready for a great weekend. As we head into yesterday markets, actually S&P crossed over 5,500 for the first time. Didn't close there, but it did cross over during the day. Hey, we'll talk about that and more things when Dave joins us here in just a few seconds. Before we do, though, let's not forget that in the world we live in, there are so many things that are out of our control. However, you can take control of your investment portfolio by knowing the amount of risk you have in your portfolio versus the amount of risk you should have in your portfolio. That's why I created the Core Retirement Design. Give me a call at 863-382-0037 for your scheduled core retirement analysis. With that, we've got Dave coming up next.
Light FM, that be the plain white tees. Must be casual day for them too. 8:41 here, 19 before 9. Time to check in on your money like we do every single morning. Phillip Statler from Statler Financial Services is on with us, and this kind of comes up with that lesson, Phillip, of the bigger they are, the harder they fall, huh?
Well, it does, and let's face it, we're talking about Nvidia, and it's had a nice run, and you expect coming into the end of the week that maybe people would take some profits off the table and see where it goes from here.
Probably makes some sense. We were talking before we went on the air. I saw a bunch of tip sheet articles yesterday morning after we got done saying maybe it's time to take our profits on Nvidia. Evidently somebody listened because there's no business reason for it, but Nvidia's stock turned lower yesterday. $246 billion worth of market cap swing in one day, which sounds precipitous until you consider the fact that they were worth $3.3 trillion. Gosh, now they're only worth about $3.1 trillion. Don't you feel sorry for them, Phillip?
I do, Dave, but it still probably keeps them at the top of the list, doesn't it?
Yeah, they're number 2 now. Microsoft is back to being the number one market cap company in the country. So, gosh, poor Nvidia. I guess they're going to have to run a sale or increase their dividend or something, huh?
yeah. Do something to get everybody's attention again.
Net result was we had kind of a reversal of what we've seen recently. The Dow yesterday had a really good day, which is good because they've been kind of beat up for the last few weeks. It was up almost 300 points yesterday, up 0.75%. Thank you, Nvidia. Standard & Poor's was down by almost 14. That's only 0.25%. And the NASDAQ lost about 0.75%, down 141 points. And Nvidia was the biggest capitalization mover of the bunch, and that's probably why we're looking at the Dow, because Nvidia's not in there, went up, and everything else fell like a relative rock yesterday. It's a relatively slow morning in terms of government data dump stuff coming out, but I did find a rubber chicken speaker out there. Our dear friend Mr. Cash Carey from the Federal Reserve did a rubber chicken speech, and he says they see some softening in the economy. Gosh, what was your first clue, huh?
Really? You think? Hey, I did see this article. I found this interesting. It says, "Be careful what you wish for." Mm-hmm. The S&P 500 typically falls after the first rate cut, after going up. So they say, usually it drops 1.5, 1.5 to 2% when the first interest rate cut happens after you've had a bunch of upswings.
Well, I guess when you think about it, that makes some sense. I mean, strategies change every time anything major happens, and we have no particular reason to see it turn into a market dump-off. You see a jittering on the indexes as investors change their strategy from dividend to growth stocks or whatever their emphasis happens to be. Probably makes some sense. Did the article say how long that dip tends to last?
About 6 months. No, I'm sorry. I saw 6. It's about 3 months, 3.5 months.
And that actually makes some sense because, if you see a change in monetary policy, I suppose strategies start changing as well. It's going to be slow. We are going to get some stuff that's going to be market moving today. We're going to get the S&P reading on leading economic indexes. That's going to count for something. And then a bunch of smaller Standard & Poor's data things. that given the fact there's nothing else, they may move the market more. Global manufacturing information, global U.S. services, the PMI numbers on that, a bunch of indications that may give investors a picture as to where the economy is heading. And that cash carry rubber chicken quote today kind of surprised me, just on the grounds that, well, we're into that time where they can take the free food, but we generally don't see indications that, we're kind of thinking seriously about easing off a little bit. You don't see that very often on the rubber chicken circuit.
No, but the other thing you got coming out today that I think will be pretty important is existing home sales comes out, which will give us an idea of the real estate market.
And that's been we always talk about the construction industry being so important because it affects so much other stuff. And we've had some softening indicators over the last couple of reports that we've had.
That's right. We have now on Wednesday next week, late in the morning, we do get new home sales. So existing home sales today, new home sales on Wednesday. So between those two reports, that's going to give us a pretty good feel about how the real estate market is doing.
Yep. Between that and the personal consumption expenditure inflation number at the end of next week is going to be a much more eventful week than this as far as economic reports are concerned.
It will be, because you got the final, or maybe it's not the final, the second GDP reading comes out on Thursday next week too.
Oh, that's right. A big increase, and that would be something that they wouldn't necessarily be looking forward to on the stock markets anyway. Slow reporting day today, but I wonder how the car business is doing. How did CarMax do last quarter?
The CarMax is about the only report we've got today, Dave, and their profits fell year over year by about 33%. They don't get me wrong, they beat expectations for the quarter. They were expected to make 94 cents a share. They made 97 cents a share. Revenue was okay, better than expected. But I was looking at the year over year number based on this quarter. And that number, if you look at what it was a year ago, they made $1.44 a share compared to the 97 cents they made this last quarter. And revenue, big difference there too, Dave. A year ago, revenue for this quarter was $228 million. This quarter, $152 million.
I got a question.
Yeah.
Where are all those big fat cat companies that are price gouging for sky high profits and causing all of our inflation problems?
Well, here's what they're saying. They're saying that that the margins are shrinking in the used car market because new car sales, got a lot of incentives out there now for new cars, and dealers are giving a decent trade-in for the used cars. So it's hurting companies like CarMax that only specialize in used cars. So it's making their margins thinner, and so, which means to me maybe now you can get a decent deal on a used car. I mean, they said they're having to discount rates to heavily discount rates. It says in this article to sell cars.
Well, my tongue-in-cheek question was kind of on the generic side of the fence because that's the current political football. Inflation is being caused by greedy publicly traded companies, and it's pretty much a common thread that the profits are. They're finally improving, but I mean, they were off through all of last year in a whole lot of other sectors, like, for instance, CarMax. Their profits are not even close to what they were last year at this time. So, like I said, where are all those greedy companies that are gouging us and making astronomical profits, right?
Yeah, exactly. So not real well for them right now.
Did you find anything else? I know we were kind of short on reports when we talked before we went on the air.
Some downgrades and upgrades. I found this upgrade pretty good. Nike got upgraded by Oppenheimer to outperform. They feel like there's a 25% upside that they've kind of, they've been out of favor this last probably 6 months or 7 months or so. And Oppenheimer feels that they've kind of bottomed out and has reinstated them as a top mega cap pick right now. So that's was helping them. Yeah, that's helping them this morning, up 1.3%.
All righty. I had one tidbit I didn't get to earlier. You and I have been talking about commercial real estate being a potential bubble that could cause us some problems on banking.
Mm-hmm.
After a tidbit a couple of weeks ago that they were stress testing and found some danger zones for a few banks around the country. Headline this morning: banks are facing $141 billion in commercial real estate losses this year. 141 billion. All those empty offices in the big cities, somebody's still got to pay a mortgage on them. $141 billion in losses expected. Something that we need to start watching on the financial stocks, don't we?
Yeah, I think so. Now, I tell you the other one that I found this interesting is SpaceX came out with a Starlink mini satellite internet antenna. $600. You can take a satellite with you wherever you want to. It'll fit in your backpack. It weighs about the same as a laptop. And so all you need is it takes less power than a normal satellite would, and that you can carry it with you. I thought that was pretty compelling.
I'm waiting to see the TV ads for that one. Some goon in a mountaintop takes a satellite dish out of his backpack.
With a solar panel to power it.
Oh, yeah, that's right. Got to remember, we got to solar power it, too. Resetting the table, blue chips were up. Adventurous growth stocks generally down yesterday. Thank you very much, NVIDIA. 45 minutes before we open this morning, what are we looking at?
Yeah, on the index, we got more red than we have green this morning, Dave. The Dow is going to retreat just a little bit, less than 0.1%, down $23 right now. S&P 500 is basically flat, down $1. And the NASDAQ 100 is up about 0.1% right now. On the other side of the coin, we've got silver down 1.5%, but still above 30 at $30.37 an ounce. Gold is up about 0.4%. And then crude oil way above yesterday, Dave, up about 0.2 to $81.43 a barrel.
Well, let's make some more oil and flood the market or something. Overseas markets, the Asian rim generally off. It wasn't a major league sell-off, but everything was off by around 1% this morning at 6 a.m. when they closed up. Europe is looking at our futures and saying, we're going to be a little bit more conservative. Average index in Europe running between 8 and 0.85% right now, down they're halfway through their trading day. I need to figure out how I can retire and plan on getting a retirement that I was hoping I could do. That takes a little bit of help and risk management from a pro. How do I find you to get my plan back on track?
We want to help people dream about their retirement by helping them create the right plan with our core retirement design. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And you and me back again together next week to tell you what's going on in the moment of time. Phillip, thank you so much. I'll see you then, all right?
All right, man. You have a great weekend.
Thank you, my friend. You do the same. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great weekend. And I'll be out next week, but I will catch you the week after. Have a great weekend. Bye now.